Are you an S-Corp using QuickBooks Payroll and running out of time to pay yourself a reasonable salary? Don't worry, I got you covered. My name is Ryan Poblete. I'm a freelance bookkeeper. I've been a bookkeeper for 3 years and I help small business owners with their QuickBooks and accounting. Today's video is about how to pay yourself a one-time reasonable salary using QuickBooks Payroll, and it's specifically intended if you're an S corporation. I find there's a lot of videos out there of why you should be an S-Corp, when to be an S-Corp, and even how to become an S-Corp, but there's not a lot of step-by-step instructions on how to pay yourself a one-time reasonable salary, especially if you elected to become an S-Corp and it's getting toward the later end of the year and you still have to meet that reasonable salary requirement. A quick disclaimer, this is not accounting advice. Consult with your accountant first to see if it makes sense to do this. Let's dive in. In this video, I'm not going to go over in detail how to set up QuickBooks Payroll. You can probably find other tutorials like that pretty easily, but if you'd like me to make a video like that, let me know in the comments below. Today, I'm specifically going over how to run a one-time payroll for the whole year. So for example, if you elected to be an S-Corp and got the acceptance letter in the middle of the year, and you didn't set up payroll, and now it's toward the end of the year, this could be a good video for you because you need to fulfill that paying yourself a reasonable salary obligation as an S-Corp. The first setting that you want turned on, make sure you have your taxes and forms automatically filed and paid. Go to the gear icon, payroll settings, and then taxes and forms. Make sure this is turned on. Next, add yourself as an employee if you haven't already. Go to your payroll menu, Employees tab, add employee, fill out your information. After that, hit save. Then you can click on yourself as an employee. Scroll down to base pay. You can hit edit. Make sure this pay frequency is per year. So change your salary to the amount that you want to pay yourself. Make sure you don't change this setting to per month. I know it actually makes sense to do that, but you want to leave that alone, and you just want to simply multiply your salary by 52 weeks, and QuickBooks will automatically calculate the amount per pay period. So for example, if you want to pay yourself $16,000 per year times 52, it'll be $832,000. If you change this setting, by the way, to per month, it could mess up something on the back end for QuickBooks Payroll, and it might take out your taxes multiple times. So make sure you don't touch that button. Then you can hit save. If you change the setting to monthly and you run the payroll, you might have some issues about taxes getting submitted twice. If you did this and you receive an email from Intuit that tax payments will be submitted on 2 different days, try to get a hold of QuickBooks Payroll. Phone number is in the description of this video, and see if they can stop the second payment. If you see it in your bank account that the second payment is still getting processed, call your bank immediately and have them stop the payment. Make sure this duplicate payment does not go through. Otherwise, you'll have to deal with the IRS about getting that money back. Next, you can run the payroll. Hit run payroll. Enter a pay period. You can select a pay period close to the current date. Then you can select the pay date. You can choose whatever day. You can put tomorrow if you want. Double check this salary section is the amount that you want to issue yourself a one-time payroll. And then change the payment method to direct deposit. You might have to enable this setting if you haven't set up payroll before, but it's pretty straightforward. You just have to enter your bank information that you want to receive the funds in as the employee. Then you can edit the paycheck. This actions menu, 3 dots, edit paycheck. If you want to have any federal taxes withheld, that would go over here, and then you can change that amount. If your federal tax liability at the end of the year when you file your taxes is over $1,000, then you will receive a penalty and you'll just pay your taxes at that time. This is why some people get a refund and some people owe taxes. They either withheld too much federal taxes or not enough. Then for your employee taxes, your Social Security and Medicare is equal to 7.65% of your total salary. For your employer taxes, same thing. Your Social Security and Medicare is 7.65% of your total salary. FUTA is what funds unemployment benefits on a federal level, and that's equal to 0.6% on the first $7,000 of each employee's wages if you pay this tax on time. Otherwise, it's 6%. SUTA is what funds the state unemployment benefits. I live in Florida, so the amount is 2.7% on the first $7,000 of each employee's total wages. Double check your state's SUTA tax to clarify that for your specific state. You can hit save once you change your settings if you want to withhold any federal income taxes. And then you can run the payroll. So for the purpose of this example, I'm not going to run the payroll, but that's how you would pay yourself that one-time reasonable salary. Next, you can change back the salary to the $16,000. Go back to your employee settings. Go back to the base pay. Change it to $16,000 or whatever the amount that you want to pay yourself. After you run the payroll, there will be two amounts that get withdrawn from your bank account. First amount will be your salary minus any federal income taxes withheld minus your employee portion of Social Security and Medicare tax, which is 7.65%. Second amount is any federal taxes withheld plus both employee and employer portions of Social Security and Medicare tax, which is equal to 15.3%. If your salary, for example, was $16,000, you will not see a withdrawal of $16,000 from your bank account. The amount will be actually a bit higher because of taxes. The first amount that will be withdrawn, assuming no federal taxes were withheld, is $14,776, which you will receive in your personal bank account, and that's $16,000 minus $1,224. The other amount is $2,448, which is $16,000 times 15.3%. Lastly, if you live in Florida, most likely you will have to file an RT6 for previous quarters for unemployment tax, aka FUTA and SUTA. I'll probably make a video about how to file these for previous quarters to avoid penalties and interest in the near future. But for now, check with your state's taxing authority about unemployment tax filing instructions. That sums up my video. Hope that's helpful. Drop me a comment if you have any questions, and I hope you all have a great rest of your day.